Welcome to the Transparent FX Academy. If you're new to the channel, I'm Nick and I've been a top author on TradingView for many years, as well as being one of the only traders with a fully verified MyFX book track record. So if you want to elevate your trading, you're definitely in the right place. So subscribe to the channel, and without further ado, let's jump right into it. So take a second, pause the video, read the disclaimer, and I will see you on the charts. In this video, I will be breaking down some of my favorite trades from my strategies, and I will be dissecting them from a top-down perspective to see exactly what kind of market conditions were there when the trades were executed. Now, as usual, being one of the only traders with a fully verified MyFX book, none of those trades can be made up. They're all there in my MyFX book, so all verified. So without further ado, let's go see exactly what kind of strategies were applied on those trades and learn as much as possible from this. The first trade that I want to speak about was on BTC USD. The EA, so essentially the strategy that was applied here on this trade, was the BTC Pulse strategy, which you find on my website. You find a full breakdown of this strategy, exactly how it works, and a complete 10 years backtest of this strategy on real market data. So what kind of situations there were when this strategy was executed, when this strategy executed this particular trade? Well, what we can see is that we had a situation in which we just had an inversion of trend. The market went from the creation of higher highs and higher lows. So we had a bullish market to then the creation of lower lows and lower highs. This is a standard and perfect inversion of trend from an uptrend, so higher highs and higher lows, to a downtrend, so lower lows and lower highs. Obviously, in an uptrend, long setups, so buy trades are favored because they are with the trend. And in the market, I'm sure you're familiar with this already, there is a saying that trend is your friend. So you're supposed to be looking for trades unless you have a specific counter trend trading strategy. You're supposed to be looking for trades in the favor of the trend, which can be both bullish or bearish, like in this case. So the trend here on the weekly was clearly bearish. From a daily perspective, what we had was also here a clear bearish market. We had here the creation of this head and shoulders formation. We had the left shoulder here, the head here, the right shoulder here. The market broke lower. Again, we had a new impulse, correction, new lower lows. So also here on the daily, we had head and shoulders, lower lows and lower highs that were being created. So clearly we had an aggressive downtrend also from a daily perspective. And if we go and see what was going on when it comes to the 4-hour time frame, we can see that we had also here a clear bearish trend. So everything from a momentum standpoint was aggressively to the bearish side. Also, the non-commercials were moving back to the bearish side for BTC USD. So institutions were again starting to short BTC USD, going from a positive net positioning with more longs than shorts to now a negative net positioning. So again, with more shorts than longs on BTC USD, therefore making it weaker. And what we had also here was a break below the low. Now, if we go down on the 5 minutes time frame to see the trade in its specifics, what we can see is that also here in the 5 minutes time frame, the market was breaking below a quite significant structure level. This zone was acting as previous support here. Then the market broke below that zone. The previous support became resistance all across that zone. Now, the strategy triggered the trade as the market was breaking after the break, retest, and start of the continuation to the downside. The stop loss was above the resistance zone. The take profit was for a nice 1.374 risk to reward. So more than 1 to 3, almost 1 to 4 risk to reward, which after a bit of sideways price action and multiple retests of the resistance level in the end ended up being respected, and the market broke to the downside quite aggressively, triggering the take profit for a nice 1 to 3.74 risk to reward. Let's move to the next setup. The next trade I want to speak about was here on USD JPY. Now, also here, quite interesting setup. First of all, what kind of situation from a technical perspective did we have? Well, here in the monthly, we had a market which was testing, respecting, and rejecting to the upside a quite strong historical monthly demand and support zone. From here, in multiple occasions, the market got rejected to the upside quite aggressively, and we just had once more another test of this level, and the market was already respecting the level, rejecting it to the upside, showing also signs of strong institutional buying. So on the monthly, everything was quite bullish, and we will speak about institutional buying as soon as we move to the commitment of traders analysis. But for now, let's keep that in mind and drop down on the weekly time frame. Now, from a weekly perspective, what we had at the time is a perfect inversion of trend and structure. The market went from the creation of weekly lower lows and lower highs, so we had a clear bearish market, to then the creation of a triple bottom here exactly at this zone, and that is the moment the market inverted from the creation of lower lows and lower highs to the creation of higher highs and higher lows. So that is the inversion of trend. The market at that point started pushing higher with the possibility of seeing more bullish price action being created away from this level. So again, also here on the weekly, everything was quite bullish with a perfect inversion of trend. Dropping down on the daily, what did we have? Well, here on the daily, what we had was a situation in which the market had just broken a quite significant structure level, which was this level here of previous daily resistance from which this push to the downside was created. The market then created an impulse to the upside, broke above that zone. At that point, that previous resistance became support. The market retested the previous resistance, turned support, and started rejecting to the upside quite aggressively. Now, if we remember, I had also created a full analysis of USD JPY on my YouTube channel, explaining all the reasons for which from here I was expecting, in fact, this rejection to the upside. Now, if we drop down on the 5 minutes time frame, we can see the setup in all its details. What we can see is that the strategy, in this case, this was my Terminator strategy, which again, you find a full breakdown also of this strategy on my website with also full historical in more than 10 years backtest. What we can see here is that when the market was testing this zone, which was also here on the 5 minutes time frame, quite important structure acting as previous resistance, then broke to the upside and acting as support, the strategy executed the trade with a very conservative stop below all structure, and the market quite quickly, considering that all of these are just 5 minutes candles, went all the way up and hit the take profit for a nice 1 to 2.39 risk to reward. So quite a nice setup, triggered with a quite massive start of the rejection to the upside, very little drawdown on the setup, almost immediately in profit. So this was a quite interesting setup. Let's speak about the next one. But before we do that, actually, I wanted to also see what was going on when it comes to the commitment of traders situation. And on the JPY, in fact, what we had was that institutions were longing at the time of the setup USD JPY, because net positions were dropping massively. We went from 179k net positions, so a situation in which institutions were aggressively positioned to the bullish side for the JPY with 202k longs compared to only 23k shorts, all the way down to now having a very low net positioning, 46k net positions with 112k shorts and only 159k longs. Now, if institutions are shorting the JPY like they were doing with this decrease of the net positions, they are longing USD JPY, because if institutions short the JPY, it means they're longing USD JPY, because all currencies on the spot are traded against the USD. So institutions were aggressively longing USD JPY, which added confluence to this nice big push to the upside. Let's move to the next setup. Just a quick interruption. Let me know in the comments below any new pairs or topics that you would like me to cover in my next videos, because I'm always open to suggestions. Actually, another setup that I want to speak about is again here on BTC USD, and it was in the same days as the other setup that I have just spoken about. And again, it was even the same strategy, the BTC Pulse EA. And this shows that while the majority of the retail trading market on BTC USD was getting slaughtered because of their leveraged longs, while the market was dropping to the downside aggressively, we had the peak amount of liquidations in the crypto market during this push to the downside. My BTC pulse strategy was actually capitalizing on all this push to the downside. So from a strategy and technical perspective, we already spoke about what we had. We had a strong push to the downside. We spoke about what kind of price action we had and what also we had from a institutional perspective. So let's go and see what this other setup was if we drop down here on the 5 minutes time frame. Now, what we can see is that here we had another situation in which we had a massive break of an important structured zone. Also here, this level was acting as previous support in multiple occasions after the market broke it to the downside and the market was retesting this level. The BTC Pulse EA entered into a nice short, stop above the high, take profit for a nice 1-to-4 risk to reward, again triggered in just few hours with this push to the downside. Now, what we had here is another example of why trading psychology is very, very important. Because what we can notice is that even though the market entered the trade, the strategy, triggered the trade, and the market reacted to that with a massive push to the downside, then we started to get a lot of choppy price action close to the take profit, but not really at the take profit. Now, be honest with yourself. How many times in your trading you have seen something like this? So the market is close to your take profit, but every time pushing back up, and instead of letting your strategy play out, you actually closed the trade early, and then the market went anyway to your take profit. I'm sure the answer to that is quite often. And why didn't I do that? Why did I let the trade run? Because since I have many thousands of hours of historical backtesting and really getting to understand my strategies in detail and having that historical backtest and data on each and every one of my strategies, I can trade them with confidence, knowing that sometimes, yes, it might happen that the market might go back up and close at a break even, but in the long term, it will be much more profitable if I let the trades run because I know the statistical advantage and edge of my strategy. So that is why it is important to have a solid trading psychology, but that mostly comes from competence and knowing the data behind your strategies. Let's move to the last setup that I want to speak about in this video. The last trade that I want to speak about was on the German stock market index, so the DE30. Now, what kind of situation did we have here? Now, first of all, let's take here the higher time frame on the monthly. On the monthly, we had a market which was in a very strong uptrend and had just entered this period of horizontal price action. Now, usually when you have a strong uptrend and then the market starts moving horizontally, what this usually means is that you're entering a distribution. So essentially, big players were buying and then they're starting to sell. And then you get the inversion of trend to the downside. Same thing when people are talking about accumulation, you're seeing horizontal price action, and then you have the inversion back to a bullish trend. So in this case, we had a distribution phase happening here at the top with good probability of some potential bearish price action being created away from this level. Dropping down on the weekly time frame, what we had was a market here that was again showing a potential breakout from this consolidation, with the market creating a new low below the previous low. So the market was pushing to the downside, breaking this distribution phase with the potential of triggering the bearish move to the downside that seemed quite possible here on the monthly. From a daily perspective, again, same situation. We had a market which failed going higher. As soon as the market tried going higher above the previous high, immediately got rejected to the downside and started pushing lower quite aggressively. So how did the strategy execute this setup? And again, also for the strategy on DE40, you find a full historical backtest on my website with all the description. Go and check it out if you're interested. And what did we have here was a situation in which, if we look at what was going on, we had the massive push to the downside, then correction, the market started losing some steam, because when you're seeing something like this, a strong push to the downside, so sellers clearly are in control. Then buyers seems to be stepping back in aggressively, but then they start losing their steam. You get smaller and smaller push movements in the market, and then a new push to the downside. I'm sure you have seen this pattern already in the market in your own experience over and over again. That is exactly what was happening here. We had them push to the downside, buyers came in aggressively, started losing steam, and then sellers stepped back in and pushed the price lower. That is exactly when the strategy triggered the trade at the break below the previous low, stop above the high for a nice 1 to 3.33 risk to reward, which in this case was actually achieved quite quickly. The market pushed to the downside aggressively, so it was quite painless, immediately in profit and straight to the take profit. Now, everything that you see me share here on YouTube is just the tip of the iceberg. In fact, if you want to learn more, I really suggest that you head over to my website, which you find linked in the description. Here, you have the possibility to gain access to the best mentorship program in the world. You can get all my courses ranging from the very basics of charting all the way to the more advanced topics. You also have the possibility to gain access to the trading station software with the Telegram notification integrations, one-on-one private mentoring directly with me, the COT data software, which is the software that you often see me use in my analysis, and you also have the possibility to gain access to the entertaining live trading show. So essentially a live stream of all my trades as they're happening live every day. So my entries, exits, how I manage the positions, all streamed live every single day essentially in this Telegram channel, which is obviously private just for members. You also have the possibility to gain access to all my EAs. So essentially all my strategies, which you can then customize to your own preference. And here you see breakdowns of each and every one of my strategies, including a 10-year historical backtest of the strategy on high quality tick data. So essentially backtested on live charts. So basically, I would suggest that you go and check these ones out. And if you continue to scroll down past the testimonials, you will see that you have the possibility to join and gain automatically access with the email and password that you will create during the checkout process. So I really suggest to at least go and check it out. The link is in the description and I will see you in it. If you enjoyed the video, make sure that you drop a like and a comment. It really helps with the creation of new free analysis and education. And I will see you in my next video.